Our highest time value is hidden in at the money only, sir. That is the animal you need to hunt, not going and hunting out of the money and taking 1 rupee, 2 rupees. So welcome guys. So this is the foundation 3 of options. This is again a foundation. So this is most important video. What is the meaning of intrinsic value and time value? And also we'll discuss, after this too, we'll discuss what is theta and delta. So what is the meaning of delta, what is theta, intrinsic value, time value. So let's take one example. See, market is trading the same. Where is market is trading? 16,594. You can see here 16,594 point. Let's make it as 16,595. See, market is trading at 16,595. So if market is trading at 16,595, let's say today is a expiry day. If today is a expiry day, where should market expire? I mean, if today is a expiry day, where did market expire? 16,595. If market closes at 15,595, this option premium should be trading at 0 rupees. Then why this is trading at 227? It's all because of time value. So the markets have been divided into, if you buy 16,600 call option and market is trading at 16,595, then if today is expiry day, this should trade at 0 rupees, right? But this is trading at 227 rupees. Then the intrinsic value and time value, see, any option premium if you take, that is divided into two pieces. One is intrinsic value and one is time value. So IT, we need to know the meaning of IT, intrinsic and time value in options. The intrinsic value is 0 in this one, the time value is 227 rupees. So carefully observe, you will understand. Don't worry, you may say, sir, I'm not understanding. Very simple, sir. Let me take an example of 16,300 call option. 16,300 call option. See, where is market trading today? 16,595. The story is same. Where is market trading? 16,595. That is known. But what is the premium of 16,300 call option? This is 17th March expiry. Which expiry? This upcoming week expiry, 17th March. And today date is March 10th. Today date is March 10th. Let us assume today date is March 10th. So 7 days you have for expiry, and 16,300 is trading at 406 rupees. But what should it trade at? See, if you speak, if today is expiry, 16,300 call option should trade at 295 rupees, but that is trading at 400 rupees. So there is intrinsic value. Intrinsic value is 295 rupees and the time value is roughly 105 rupees. The time value will decay and evaporate. This is just like a, let's say you are having a lace packet. You are having a lace packet with you. So you know, in the lace packet, chips will be at the bottom and rest everything will be air. The same way in options also, there is something called chips and air. The chips is known as intrinsic value, the air is known as time value. The time value will decay and evaporate on expiry date, but only intrinsic value will remain in that option premium. So options, whatever the premium you are paying now, in that option premium, you need to know the difference between intrinsic value and time value. Time value will evaporate and it will become 0, but intrinsic value will stay. Let's say, I'll explain with the same example, much more clarity I'll give you. See, you bought 16,300 call option. Person A bought 16,300, person B bought 16,600 call option. See, the premium E paid is 400 rupees and market is trading at 16,595. and premium E paid is 227, and the market is trading at same, market is trading here. So you have got another 5 trading days for expiry day. You also got person A also the same expiry, person B also the same expiry. Let's say next 4 days market stayed sideways, dead market, we can say market is like a dead market, is not at all moving. Then you know this on expiry day market expired at 16,595. If market expires at 16,595, then this premium will melt and become some number. What is that number? Very simple, sir. Above your strike price, how many points above market expired? Just tell me. Above your strike price, see if market stays flat and expires at 16. See, today also market is trading at 16,595. On expiry day also it is trading at 16,595. How many points above market expired? 295. Right? 295 points above market expired. That is known as intrinsic value in the option. And whatever you paid extra, no, 105, that is just for a time. So you are getting 5 days, 5 working days as a time for expiry, right? You are getting 5 days time. For that 5 days we are paying a premium extra, that is 105 rupees. So let's say you are going to one normal hotel and one plate of idli will cost 30 rupees, and you are going to 5-star hotel, the same plate of idli will cost you 200 rupees. So what is the difference between normal hotel and 5-star hotel? It's just ambience, right? Ambience, and so the where you are spending the time is a matter. So for the time you are paying, for the ambience you are paying extra. So here also it's not a matter of ambience. For the time you have got 5 days time, that's the reason you are ready to pay 105 rupees extra and buy this 295 rupees. The actual net, I mean the value of the hidden core secret value of this option is only 295 rupees, but you are paying 105 extra. But for this one, the hidden core secret value of this option is 0 rupees, but still you are paying 227 rupees extra. Why? Because only for time, in 5 days you have got time, in 5 days market will go above. That's the reason you are paying 227 rupees for this one. So all the out of the money options, note it down, all the OTMs intrinsic value is 0, time value is highest, or all the OTMs have only time value. So OTMs have only time value, intrinsic value is nil for OTMs. So understood? So if intrinsic value is nil, if market expires at wherever it is, all the OTMs will become 0, because on expiry day only intrinsic value, only lace packet में chips will remain in the packet, all the time value will evaporate. This is what the meaning of intrinsic value and time value. So now let me test your knowledge. So in this 16600, the time value is entire 227 rupees. Now let's say 16500, what is the time value? So time value is subtract, see what is the intrinsic value, tell me intrinsic value. See market is trading 16,595. So just see here, market is trading at 16,000, yeah, 595. Sir, my above my strike price, market is trading above my strike price only 95 rupees, sir. But this price is trading at 286 rupees, sir. Very simple, sir. Subtract 95 from this one. So roughly, so 95 if you subtract, roughly you are paying 190 rupees extra. Understood? 190 rupees extra you are paying, sir. That is the time value you are giving. The time value will decay and evaporate. So on the expiry day, your lace packet will be punctured and all the air will go above. Only intrinsic value will remain. ಸೊ ಇನ್ ಕನ್ನಡ ವಿ ಸೇ ಸೊ ಎಕ್ಸ್ಪೈರಿ ದಿವಸ ಗಾಳಿ ಎಲ್ಲ ಈಚೆ ಕಡೆ ಬಂದ್ಬಿಡುತ್ತೆ, ಬೆಲ್ಲದ ಪಾಕ ಮಾತ್ರ ಉಳ್ಕೊಳ್ಳುತ್ತೆ. ಸೊ ದಿಸ್ ಈಸ್ ವಾಟ್ ದ ಮೀನಿಂಗ್ ಆಫ್ ಇಂಟ್ರೆನ್ಸಿಕ್ ವ್ಯಾಲ್ಯೂ ಆ್ಯಂಡ್ ಟೈಮ್ ವ್ಯಾಲ್ಯೂ. So intrinsic value is a rigid solid lace packet, whatever the intrinsic value it is there, no, that is rigid solid, but time value will decay and evaporate. So next question may be, so today market is trading at 16,595. Tomorrow if market comes down and closes at 16,300, then this becomes at the money. At the money also, you know, if 16,300 where market expires, then entire this will become intrinsic value becomes 0, entire it becomes time value, and that time value will evaporate. So if you can understand intrinsic value and time value, then you can sustain in the markets. So now let me show you very clearly. So this is March 10th expiry. Let's say today is expiry day. Still you didn't understand, no problem, just listen this few seconds video, you'll understand. Very simple, sir. Today is a expiry day, market got expired. Now you just see, where did market expire? 16,595, right? See, 16,595 means this market has not reached this level. What it should become? It should become 0, but this has reached, market has reached 16,550, reach ho gaya na. Now why it is trading at 44 rupees? You just ask your mind, subconscious minds, just pucho, sir, on expiry day market expired at 16,595, but this is trading at 44 rupees. It didn't become 0. Why it didn't become 0? There is an intrinsic value. So intrinsic value will not become 0 on expiry date. Sir, how come this is 44? Just subtract, sir. 16,550 above, how many points above train got stopped? Or above your strike price? Very simple question. Above my strike price, market closed 44 points above. That's the reason my option premium is trading at 44 rupees. Very simple. Next, above my strike price, market expired at 94 rupees. So that's the reason my premium is trading at 94 rupees. So next, above my strike price, market didn't close, my option premium became 0. Next, below my strike price, put option. Sir, below my strike price, market closed 105 points below. That's the reason it is trading at 105 rupees. Next, below my strike price, market is trading below 305 rupees. That's the reason I'm trading at 305. So previous day I was trading at 547 or something. Entire year got evaporated, sir. Sir, previous day, this, just add this one to this one, this was trading at 500 and some change. Can you see? The air which was inside the balloon got bursted on expiry day. So expiry day is a day where big shots will burst all the airs in the balloon. Only the lace or a hard coat solid material will remain, and entire air will evaporate, sir. So now, sir, on before expiry day I was trading at 350 rupees, sir. Which was this one? It was in the money. See, even though you were in the money, don't assume that you are safe. If market starts going against your favor, whatever the intrinsic value you have, no, even that will get decayed as per the market. See, as per the market, see, market is trading at 16,594. How many points below your strike price? Just 105 points. So 249 rupees got melted and it got evaporated. So intrinsic value, time value, very important factor before understanding the meaning of theta and delta. So I hope intrinsic value and time value is clear. So let me test your knowledge once again. Let's say market is trading at 16,600, sir, and premium it is trading at 500 rupees, and you bought 16,600 call option. So market is trading at 16,600 exactly, and you bought 16,600 call option. So what is the time value and intrinsic value, sir? Intrinsic value is 0, time value is 500 rupees. You know, the time value is a thing where you are paying extra money. See, time value is extra money you are paying. And what is a break even formula? See, the break even formula is equal to 16,600 plus 500. So you are paying extra 500 rupees, right? That premium, the premium whatever you are paying, that time value, you just need to add the time value to this one. That is a break even. And 16,600 plus 500, what is the answer? 17,100 is a break even. Sir, can you tell me the break even for 16,300, sir? What is a break even? Very simple. Again, I'll just take you to the website where it will give the answer. Say 16,300. What is a premium trading at? See, more clarity you should get. Without clarity, don't come to stock market. Don't do options. So 16,300 call option I purchased, sir, paying 400 rupees, sir. My break even is 16,707. See, many people get confused. Break even means strike price plus premium. That is okay, I understood. The beauty of the subject is the break even is strike price so plus premium paid, or else where is the market plus time value. See, where is the market? See, don't forget this strike price plus premium paid. You create your own break even formula with common sense. What is the common sense? Where is market trading? 16,594. 16,594 को time value add करो. What is the time value in this one? 105. Add 105 to the, so where is market? So that is the first question. Market is trading at 16,595 na? Add time value. Time value is, so what is the time value in this one? 105. Add 105 to this market. Market is here. Add one, that is the break even. So if you add the time value to the current market price, that itself will give the break even. So many people will buy it. Break even is equal to strike price plus premium paid. Who told? Just throw that break even formula. Just understand break even. How you got the break even, you understand. Market price ko just add the time value. That's all the break even. So I hope you're able to understand the difference between time value and intrinsic value. Intrinsic value is a rigid solid material which will stay inside the option premium, but time value will decay and evaporate on expiry day. This is very, very important. Now let me go to the meaning of delta and theta. See the theta, see where do you think theta is highest? So this is option chain. Again I'm opening a Sensible website. Note down the website, go to Sensible, login, click on this option chain. So I clicked on this option chain, and sometimes the theta delta will not come. So go to this settings, go to the settings and take this theta delta vega and all. So let me show you the theta. So can you see where is the theta is more here? So theta is more near at the money. So why? Sir, why theta is more near at the money and little out of the money? Very simple, sir. The question you need to ask yourself is, sir, where will be the highest time value in an option? The highest time value will be near at the money. At the money has the highest time value. At the money option has the highest year. So which lace packet has the highest year, sir? Very simple answer. In which lace packet highest? In the money lace packet, or at the money lace packet, or out of the money lace packet? The answer is very simple. At the money has highest year in the lace packet. So year, highest ಗಾಳಿ ಇರೋದು at the money ಅಲ್ಲೇ sir. So that's the reason the theta decay will be higher near the market zone. So where is market zone? 16,600. So around this area there is a theta decay highest. So can you understand the meaning of theta decay? The theta decay will be highest near at the money and little out of the money and little in the money. And as we go in the money, the theta decay will be very, very less. As we go out of the money, the theta decay will be faster. See, there is a difference between faster and slower. The theta decay is very, very fast near out of the money. This you need to know. Out of the money premiums will melt very, very fast. But I am telling where there is the highest time value, that is near at the money. Time value both bada hai. So if you, let's say you are going for a hunting, which animal should you hunt? So let's say you are going for option selling, which is a thing you need to hunt. Out of the money, if you hunt, you will get less food. But if you hunt at the money, you will get bada food. That's the reason people will do short straddles more than short strangles. So no one will do short strangle. See, if you want to hunt bigger animal, at the money selling is the highest theta decay, or highest money is hidden, or highest time value is hidden in at the money only, sir. That is the animal you need to hunt, not going and hunting out of the money and taking 1 rupee, 2 rupees. But for hunting at the money, you should have a lot of skills, sir. That is the main thing. So now delta. So delta means the rate of change of option premiums for 1 point change in Nifty. Let's say Nifty is trading at 16,595. Nifty goes to 16,596. See, understand the meaning of delta. So market rallied from 595 to 596. What is a point change? 1 point change. See, for 1 point change in the premium, let's say you purchase 16,600 call option and someone purchased 16,300, someone purchased 16,900. Who will make more money, sir? See, market moved only 1 point, sir. Very simple. Market moved only 1 point above. At the money, people will make more money. Sir, I bought 16,600 call option, sir. This is ATM, sir. Market moved 1 point, sir. I'll get 1 rupee, sir. Who told? So this is not correct, sir. So out of the money. Sir, if market moves 1 point, sir, at the money people will make only, let me show you the delta. The delta of at the money is trading at 0.48. Can you see? 0.48. Whereas in the money it is trading at 0.66. Whereas out of the money it is trading at 0.29. Sir, 1 point Nifty movement ho gaya, sir. So you will make only 48 paisa jump in the premium, sir, because you are at the money. Sir, 1 point Nifty jumped, sir. You will get only 66 paisa, sir. 66 paisa. Sir, 1 point Nifty jumped. You will get only 29 paisa, sir. Sir, whatever the strike price you are buying now, for each strike price there is a delta, sir. For each strike price there is a delta. So, for at the money delta is smaller, sir. So, let's say market moved 100 points above, sir. So, Nifty moved 100 points above. Sir, if Nifty moves 100 points above, let's say if Nifty goes up 100 points at this scenario, this fellow will make 48 rupees profit, sir. Very simple. But this fellow will make 66 rupees profit. Understood? 66 rupees profit he'll make. But this fellow will make only 29 rupees profit, sir. Out of the money delta is less, sir. At the money delta is 0.548. In the money delta is higher. See, some people will curse, sir, I don't have money to do futures, sir. They'll cry. No need to worry, sir. You buy in the money delta. You buy 16,000 call option. 16,000 call option is equal to future buy. These words, future buy, in the money is equal to future buy. No one will tell you all these stories. Everyone will say, buy future, sir. See, why do you want buy futures? Buy in the money, deep in the money, call buy Carlo, it itself will act like a futures. So if you say, I don't have 1 lakh rupees to buy futures, it's your mistake, sir. You don't have knowledge to know there is something called in the money which will act like a futures. See, in the money buy ಮಾಡೋದು ಒಂದೇ, futures buy ಮಾಡೋದು ಒಂದೇ. Futures ಯಾಕೆ buy ಮಾಡ್ತೀರಾ? In the money buy ಮಾಡಿದ್ರೆ ಅದಕ್ಕೂ delta 1 ಇರುತ್ತಲ್ಲ. Let me see the delta. So, but the problem is that if market falls, you lose money. The same way in futures also you lose money. The contradiction question will be, so market bidre the loss will be more. Yes, even in futures will be loss will be more. See, if you buy, let's say I will buy 16,000 call option, the delta is 0.8. Let me buy 15,500, the delta is 0.91. See, if 1000 points Nifty goes up or 100 points Nifty goes up, let's say you bought 15,500 call option. See, don't go very deep in the money, just go 500 or 600 or 800 or 1000 points maximum. Don't go very deep in the money. Very dangerous, because the liquidity will not be there. So Let's say you want to buy some 500 points in the money, delta is equal to 0.8. So sir, market is trading at 16,600 sir, but I purchased 16,000 call options and market went to 16,700 sir. And what, let's say I bought this one paying some premium, how much money will I make sir, and how much money the futures person bought in futures, he will make 100 rupees. So if Nifty moves 100 points above, the future guy will make 100 rupees, but your delta is 0.8, you will make 80 rupees, which is at least you are getting, see, for 16,000 call option buying you are paying a premium of just 600 rupees. 600 rupees means 650 rupees, roughly you are paying 35,000 rupees, or 32,500 is the investment. For 32,500 investment you are getting 80 rupees, but other guy for 1 lakh rupees investment is getting 100 rupees, but if for only 32,500 you are getting 80 rupees. See, that is as equivalent to futures, right? So that's the meaning of delta. Delta will be higher for in the money, delta will be medium for at the money, delta will be very less for out of the money. So keep this in mind. The delta will be very less for out of the money. If you buy out of the money, even if market goes up 100 points, you will get peanuts. So you will get very less money. And if you go very out of the money, and if you buy one any options, you will not even get money also. Keep this in mind. See, some people will buy 1,000 points above call option and they'll say, Baba, market is going up, will I get money? Sir, your delta is very less, sir. How can you get money? Your delta is very less. Even if you get also, you'll get peanuts. So instead of buying far out of the money, just directly parcel that money to Tirupati or Shirdi or whatever, wherever the or you donate it to orphanage. Don't buy far away out of the money options, understood, because the delta is very less. Delta, so on theta you understood, theta means the price, the premium decay is known as theta decay. So the theta will be highest, or the premium melting will be highest near at the money and out of the money, and premium decay will be faster at out of the money. See, you need to understand the difference. Premium melting is faster at out of the money, it will just evaporate and become zero on out of the money, and in the money the theta decay will be very less. In the money theta decay will be less and intrinsic value is less. So this is all about delta and intrinsic value and time value. If you know the foundation 1 2 3, if you had understood foundation 1 2 3, then the last part is question and answers, foundation 4. If you can answer the question and answers in the foundation 4, then you are eligible to do stock market tradings in futures and options. Then only you do options. If you are not able to understand foundation 1 2 3, then quit stock market then and there itself. You need to understand, you need to understand at any cost. So thank you for watching, see you in the next video. Thank you.